Welcome back to Market on Close. I'm Marley Caden. Let's discuss the commodities market with Phil Strebel. He's the chief market strategist of Blue Line Futures. Phil, thanks so much for joining us this afternoon.
Yeah, thanks for having me on, Marley.
Of course. Now, how do we trade commodities like gold and Bitcoin when we're dealing with a big stock market rebound?
I know that's been a problem, and it's really, the global de-escalation we're seeing is one of the biggest threats to the gold market. We've got one of the biggest weekly losses in 6 months and a number of different headwinds. You have the U.S.-China trade tensions easing. The U.S. equity rally really creates this risk on, and a lot of the participants that went into the gold market recently were a bit late to the party, and that's where we saw the ETF flows. Now I believe that they're starting to rotate and chase these equities higher. You've also got Russia and Ukraine, the negotiations going on. It appears that Middle East tensions have died down, and the big driver again is going to be the ETF flows weakening. So we got to look and see what central bank demand, if there's any dip buyers out there, and what are the Fed rate cut expectations? Are they going up or down? So, 31.50 down to 31.20, your critical level support on the gold market. I think 33.50 to 33.65 is your resistance. So $200 range in there. So a lot of wiggle room.
Yeah, certainly a lot of wiggle room. We saw so many people rush into gold when there was the uncertainty that we saw. Do you think that we're going back to normal right now, or have we created an entirely new environment here?
That's a great question, because I really believe that people saw the benefit of having gold in their portfolios. So I think a lot more of the retail investor is going to allocate some percentage of their portfolio to a lot of these different safety plays. It seems like, yeah, we've come to a more normalized terms at the moment here, but those types of tariff discussions and things like that could unwind pretty quickly, especially, in the next 90 days when we start those talks again back up with China.
Of course. Now, speaking of China, you mentioned the Middle East as well, and of course the Ukraine and Russia conflict. I want to move into crude oil now. What are your thoughts about putting your money in crude right now?
So oil futures have got some resistance at the $63 to $65 region. That was old support, now new resistance. You can see we've came up to that level twice here and failed. It's the Iranian nuclear agreement here is kind of the make or break moment for prices. If they make a deal, you're going to see extra supply come out of the market. And we are already experiencing a global surplus that would exceed demand, and the demand has been weaker. It's really due to the uncertainty because of the tariffs, the economy. And even though recession probabilities have been easing, I believe that people are really spending less. And you could see it in weekly gasoline consumption. You could also see it on the airline travel numbers.
Of course, and as we think about crude and as you're looking at it, what would you need to feel comfortable to be putting more money backing into crude? Obviously, we know we have this Iran deal as a possibility to derail things, but what kind of decisions have to be made, or what kind of news has to be made for you to feel like there's less uncertainty there?
Well, I think from a technical standpoint, if you see the futures trade back over that 65 level, I think that some dynamic or momentum has really changed. Maybe things have deteriorated between, on these negotiations and these talks, and that's where things really become unsettled again over in the Middle East. I think from another standpoint, from a dip buyer standpoint, realistically, you want to be in those mid to low 50s before you step a toe in the water. And I would back it up, not necessarily with a stop loss, but utilize a put option instead. That way, at least you have that safety net, but you're not going to get stopped out if the market, all of a sudden, the dynamics change, because shale producers just can't produce at that low. So there are some strains on that supply side.
And I want to shift now to Bitcoin for us. I'm taking a look at Bitcoin right now. Up on the day, we're up 23% on the month. We did see a huge rush into Bitcoin, much like we saw in gold when we saw the heavy turmoil with the tariff tantrum, as Alex was calling it earlier. And I love that term, so I'm going to borrow it. What are your thoughts on staying in Bitcoin? It's one of our uncertainties, right?
It was interesting to see that gold led the charge higher, and everyone was seeking the safety in there. U.S. Treasuries were out of favor. No one was buying on those. That's why we have yields where we are. What happened was I saw people kind of positioning out of the gold market into Bitcoin, and Bitcoin had that breakout at 85,000 and a follow through breakout at 97,000. It leaves prices where it's at. right now. You don't really want to see a big breakdown on that market back into the 90s, and that would throw up some red flags because it might wash out quite quickly. But what would drag that down? I'm not sure. Maybe more FOMO in the US equity markets could have people taking profits on Bitcoin and going back into the equity markets. But Bitcoin has been fantastic, and it's really interesting that it became this leader of this rally.
And I'm not sure if you saw, I'm sure you saw the Coinbase news that the crypto exchange had a ransom demand for consumer data. We didn't see too much impact in the actual cost of Bitcoin, but what level of concern do you think that people should have about the possibility that that can happen and now admittedly does happen?
Yeah, actually experienced something with Coinbase kind of similar where one of these developments occurred personally, and I wasn't financially impacted by it, but it really discouraged me from being involved with those types of exchanges and things like that, where they could really use social engineering to, gather your information and hack your account. The reality is that you should have a futures account and trading, micro Bitcoin, because of the fact there's so many more layers of security, or take it offline and have it in cold storage. I just don't have much faith in some of these exchanges where they could be easily manipulated.
And coming into the next couple weeks, is there anything you're specifically keeping an eye on?
It's tough because we don't really have a lot going on next week. So you could continue to see a melt up in equities and things like that. We would want to monitor any kind of, verbiage coming out of the administration, things surrounding tariffs or speculation around it. But it's really going to be quite quiet here over the next week.
Well, I'll be looking for those headlines, right?
Yep.
Thank you so much, Phil. It's Phil Strebel, again, the Chief Market Strategist at Blue.